Downsizing is a major decision in life, especially if you've lived in your current home for 10 or more years. Today we're going to take a look at the advantages of downsizing financially and some of the expenses that you should consider before you make that move. Welcome to Hendricks County Homes. My name is Andy Waggoner. I'm the team lead for the Waggoner home team at Ferris Property Group. We help people buy, sell, build, and invest in residential real estate in the greater Indianapolis area. And we are glad to have you today. If you would, go ahead and click that subscribe button so that you can be notified anytime we release a new video. Wednesdays and Fridays are typically our days, but we're going to be doing a whole entire downsizing series this year, so you don't want to miss that, along with the other content that we're producing that's specific to Hendricks County and the Indianapolis area. Today we are looking at the money side of downsizing, and there are many advantages to downsizing your home, especially if you've lived in it for any length of time. The first of which is an increase in cash flow. If you've lived in your home in more than 5 years, then you've seen a huge increase in your home's value based on the way the market has been over the last 3 to 5 years. So that influx of cash can help boost your retirement nest egg, pay off debt, and be a boost to your savings. A second financial advantage to downsizing is less cleaning and maintenance. A smaller space means less to clean, so if you're hiring that out, then that's not going to cost as much, and it's not going to be as taxing on you as well to clean a smaller space. And also home maintenance. If you downsize to a newer home, then newer homes typically require less maintenance and renovation than an older home would, so you're going to save on those costs as well. A third financial advantage to downsizing is a cheaper mortgage. If your current home is not paid off, then typically a smaller home means a smaller mortgage payment. This helps your budget have room to breathe, and having extra room in your budget can help you pay off debt or increase your savings toward retirement, or fund a grandchild's future education, or help you take an annual vacation if you'd like. And finally, downsizing usually means lower utility bills. Smaller spaces, fewer rooms usually lowers those costs of your utilities that you're used to paying. And if you're moving to a newer home, then energy efficient windows or appliances can also help lower your costs. But before you downsize, you must also weigh the costs before you move. The first is to consider if the neighborhood you're moving to has an HOA. Newer neighborhoods or condo communities typically do have a homeowners association, and those dues could be annually or quarterly or monthly depending on the community that you choose. So make sure that you add that as a budget item when you're considering a downsize. Remember, the more services the homeowners association provides, the higher those fees will be to you. The second potential cost is getting your home ready to sell. There may be some repairs that you need to take care of that you've neglected, or maybe a room or two needs painted to get it ready to show. Visit a model home to get an idea of what your home should look like, and then budget for those repairs and updates that are needed to make it show ready when it's time to sell. The third thing you should do is to talk to your insurance agent to make sure that your homeowner's insurance of your new home won't exceed the home insurance rate on your current home. There are many factors that go into your insurance rate, so make sure you talk with a home insurance pro before you consider the move. Also, make sure you look at a property tax bill before you make your move. Property taxes vary by area and can affect your payment or your budget each month, so make sure you take a look at the different property taxes of the areas you're considering to move before you decide to commit. Another cost of downsizing will be the professional services fees to the real estate agents involved in your transaction. And this typically runs around 6% in the Indianapolis area, but something to consider too when you're calculating your final payout from your sale. The final expense to consider is, are you planning to buy new items for your new home? You may just want to replace some worn out items from your old home in your new place, and that's okay. Just make sure you prioritize your needs over your wants and budget accordingly. Saving money is one of the main reasons that people downsize in retirement or just before retirement. It's a boost to the budget so that you can hit savings goals for your retirement or fund vacations, fund education, help you meet your financial goals that you have as you age. If you have specific questions about downsizing in the Indianapolis area, then comment below and we'll set up a private conversation to address those for you. And if you're ready to start your downsizing journey, then contact me today.